Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. So let's talk about BBIG. BBIG has been in consolidation on this downtrend for a long time. It's spiked multiple times, broken up to the upside to 920, 575, and most recently up to what was this? It's a high of $3.40. So BBIG has been consolidating and bouncing off of this lower level of $2 quite a bit. It's almost reached it on two separate occasions during this downtrend period. It finally touched it back in mid-March, and it's been hovering above it all of the last week. So I want to talk about the significance of this level for BBIG. BBIG does not like to trade below $2. Usually, keep something in mind, okay? If you're not familiar with BBIG as a company, BBIG is an acquisitions firm, and how BBIG works is by creating value in the company and then selling their own stock in order to generate liquid cash so that they can acquire other companies, which in turn make the company more profitable. But generally, how BBIG works as a business is by selling its own stock, making purchases, increasing their fundamental value in their portfolio, and that causes their stock to rise rapidly. And then they're able to sell more of their stock, generate more cash, and then use that cash for other opportunities. Now, they may trade in the stock market, they may trade in most of the time they're buying businesses and turning them profitable, but that's how their business works. It's a venture capital company. Now, what you'll notice is that BBIG never, ever, ever likes to approach the NASDAQ delisting threshold. Whenever a stock goes below $1, it fails to meet NASDAQ listing requirements. BBIG as a holdings company cannot allow that to happen, because if their stock got delisted, then their source of liquid cash would be gone. Now, keep in mind, they're not at risk for that happening right now, and not for a long time. Even if they went below $1, it would take more than a year for NASDAQ to delist them. NASDAQ typically gives companies at least a year to get compliant before they're delisted. But BBIG is in terms of its cash and its holdings, in a very strong position. The problem is that their cash value of their stock is diminishing. But if you look at every single time that BBIG has fallen to such a level, they have always broken out massively each time. So every downtrend in BBIG has this level that it will never cross. And if we take a look at what the price was here at this at the lowest point of this trend since it broke away from it, would have been at $1. Let's also look at this downtrend. So the day that BBIG made its first big move up, this would have been $1.75. Now let's look at this downtrend. Down here, the price would have been at 35 cents. So we're right at that point in the history of BBIG where these downtrends, as they get more and more ugly, really, these are the support levels for BBIG as far as a downtrend goes. If you imagine this trading in a channel, BBIG's support threshold would be somewhere down here near $1. What I'm anticipating is that BBIG is going to make a very similar move. So if this plays out, and given the short interest in BBIG as well as the options interest, I'm thinking that it will end up happening sometime in May where BBIG will make its next leg up. We're also anticipating a huge announcement for them. just based on their Cryptide offering. This has been in the works for a really long time, and I have my own feelings about their executive team for stringing along investors for this long. But I do have a feeling that they are getting close. It's been overdue. I think they've just been waiting for the right time. Whatever their definition of the right time is up for debate. But I do think that BBIG is due to make a move. So estimated short interest percentage of free float is not something that you can trust. We're going to use the short interest again because look at that. You can see the number of shares has been steadily increasing. It's been on an uptrend, right? That's why we want to look at this instead of looking at the short interest of free float because it's deceptive. It shows that it's bouncing around and it shows that the short interest is lower than ever, but that's not so. That's just because it's being divided by a larger free float. Now, BBIG is showing its estimated short interest is currently at 31 million, give or take 4 million. I'm noticing a pattern in the failures to deliver for BBIG's stock where after it hits its low point, there's a small hump in the failures to deliver. And the stock has been traded on the threshold list multiple times. It recently got off the threshold list back on the 5th of April. But we have a whole bunch of options interest in BBIG that got me curious. And further to that point, the lending volume is on trend to match up with what occurred back in August, proportional to its float. Now, the float's increased significantly, but I'm seeing the same patterns and the same trends in the lending volume. Let's take a look at the on-loan shares. See, this gets me more interested. See, here the short interest in BBIG was at between, it was estimated at 27.8 million, and the on-loan shares was 28.6 million. So that's a very small difference, like less than a million shares difference. Now look at where the short interest is compared to how many shares are on loan. There's a huge difference here. The last time that this happened was back when BBIG was trading in July of 2021, and the short interest was 10.7 million estimated, and the on loan was 16.6 million. That's a difference of 6 million shares. Again, we have to take into account that the free float has been inflated, so there's going to be some proportional differences, at least I think there are. But I notice at the rate that the on loan grows compared to the short interest, that tells me that market makers are taking huge loans so that they can provide liquidity to deliver buy orders. And this is a tactic that market makers use in order to protect themselves and to be able to trade highly volatile stocks. They'll trade using borrowed shares. So right now the on loan is rapidly ascending, and I think that is a preparatory move by market makers getting ready for something to happen in BBIG. Here's the thing that retail and most others don't know is that market makers are being made aware when major trades are going to happen. If there's something fundamental going on with a stock, like brokers, for example, brokers need to be prepped to make shares available when an offering for a new spinoff or something like that is going to occur, which is exactly the situation that is happening with BBIG. Because BBIG is preparing to spin off a Cryptide offering, I suspect that brokers are preparing by borrowing up a whole bunch of shares and preparing a huge bulk inventory for a massive volatile period in the stock. I expect it's going to happen sooner rather than later. So what I did was I went and looked ahead at the options interest for BBIG and took note of a huge number of calls that were consistently set at the same strike price going out multiple expirations. We would call this a calendar spread if you were to buy and sell calls at the same strike price, but on different expirations. So I'll just show you first the pie chart for the number of calls. This is basically the put-call ratio. So we've got like a 0.1 put-call ratio, and that just means we have 90% of the calls, or 90% of the total options chain is bullish with heavy weight to the call side. The float of BBIG is just under 130 million according to our stock bot, and we have heavy trading in BBIG for every single expiration between $2 and $3. Heavy focus on far out expirations for July 15th at $4 and $5. If you look at the open interest in this column here, you can see that we've got a ton of interest on July 15th for, let's see, if we were to just go ahead and add these up here, I'm going to pull up a calculator over on the side. All right, so I'm just going to add up the calls that we see here for July 15th. I'm going to multiply that by 100, and I come to the amount of 12.73 million shares. 12.73 million shares, or just 127,000 calls, roughly. So that would make up about 10% of the float in total, according to our StockBot float stat. So there's a lot of interest on these quarterlies for May 20th, but there's even bigger interest here all the way out of July. So because of this this heavy weight of interest in options for BBIG going out to July, I went and took I'm going to take myself a position on. I'm going to do the $4.50 strikes and select BBIG. Those are currently trading at about 20 cents on the ask or so, like between 17 and 18 cents on the ask. So each call contract would cost you $17. That's actually really cheap. And that's what surprised me the most about this call chain is that these very far out expirations, they're so cheap. And I don't really have an explanation as to why. They shouldn't be that cheap. There's no reason that these should be trading at such a low premium. It's only because the stock is so it's been trading so flat lately, the volatility is gone. And because the IV is just gone, nobody is selling calls. Not really, and especially not for very far out expirations. But for whatever reason, there's a whole stack of calls that are available on these very far out expirations. And I think that this, if anything, is a good place to go and make a purchase. So that's where I'm adding in, and I'm going to go ahead and I'm adding to my BBIG positions for the $4.50 strike for July 15th.